All right, guys, we got a banger today. Markets is crazy, crazy times. So anyway, we'll just jump right in. So the S&P 500 just absolutely shit the bed last week. Just massive, massive crash here. Just tariff fears, basically. Um, and so yeah, I just want to. There's a lot of good things to review today. So this one's going to be a good one. So anyhow, a lot of fear in the market, and I just want to go over a few things. In fact, let me just get my list out because um, just kind of want to make sure that I go over everything. So anyhow, first thing I want to do is I want to zoom out, and I want to show you something kind of cool. If I can get this. Oh, excuse me. Yeah. Keep it off a log. Rhythmic here. Yeah. So if we zoom out, I just want to show you what this looks like here. Um, yeah. So right here was the GFC, which is 2009, 2008. This was the last real estate cycle that rolled over, and we've just been in a up only bull market ever since. Essentially, this was COVID, and then we had a 2022 bear market. That was the largest bear market in this whole run. And if you measure these corrections, right now we're at a measured correction. And also since the end of the last bear market, I mean, this was a bear market here. We've just landed right on this 50% tool. This is how powerful these are. So, if you don't know about these, I can recreate this real quick. What I do is I use the Fibonacci retracement tool. Oh man, my computer's going to be a little slow, I think. Oh boy. Okay. Sorry. Yeah, sorry, computer's a little slow, but we'll get there. So anyway, I take the fib retracement tool, and there's a lot of different levels that you can have on it, but all I have on it is 0, zero point 0.5, and 1, and it's just a measuring tool. And so what I can do is I can take this tool and measure it, from the bear market bottom to the top so far, and these are very powerful levels in the market. They're 50% levels. Prices often gravitated towards them. So if you had this up ahead of time, this is a 50% tool of the entire market and bear market or bull market since the last bear market, and been in strong territory this whole time. And it's just absolutely amazing how when this thing just fell off an absolute cliff, it just stopped dead on the old 50% level, which actually coincides with this last top. And so those are always very good areas. I like it when the 50% tool lines up with tops and other, support and resistance areas. You get a little bit more confluence, so they're a little bit stronger. And then also we had this trend line here from way back in COVID, the COVID bottom and the um, 22 bear market bottom, and we're just right on the nuts. Absolutely amazing. So the point of this is these are very simple tools that you can put on your charts ahead of time. And as prices are falling, you can pretty much be like, oh, I bet you're right there. I bet you're right there at the 50% tool. Those tops and this trend line would be a good place to see buying step in. And so, while everybody else is panicking, not knowing what the hell's going on or what to expect, you have a little bit of a lead on this where, a crash this savage is likely to see a bounce there. Um, and so the other signal to that would be if we start seeing price action below this trend line and we get consecutive weekly closes and lower highs below this level, then we absolutely have to reassess. But so far, we're in strong territory. And this savage sell off is basically equal um, for the most part to the sell off of the COVID and 22 bear market. So a lot of people right now are expecting there's a term for it, but there was basically a Monday in the 70s where, like, the markets opened on Monday and then we had an even more savage sell off. So I think people are kind of anticipating that or worried about that. Jim Cramer's talked about it. I think that's kind of funny because, you know, there's a funny thing out there where, like, whatever Jim Cramer says, you can almost, you know, do the opposite. In fact, there was an opposing ETF for his calls that would basically anything that he would call, they would track the opposite. And so that was kind of funny. So anyway, it's not really a bullish actual bullish signal, but if he's calling for prices to tank on Monday, I know we'll just happen to see. But the thing that really matters in all of this is what BTC did on Friday. It was absolutely incredible to see, and this is exactly why I started this group. And this is very, very short term. It was just for a day, but while the S&P 500 was savagely selling off, Bitcoin actually went up and did decouple right in this zone, and is absolutely amazing to see, because even when it did decide to go give it up on Sunday, it was a higher low and it closed above this bottom, where so it's still the point that I'm really making is that on Friday Bitcoin went up against everything. Everything in the freaking world, you just put it up there. Bitcoin went up against the S&P 500 and went up against the NASDAQ. See what it, oh, that's the dollar, excuse me. Let's see what it did for gold. Gold looks, yeah, it was up against gold that day, up against silver, up against oil. So anyway, it was just interesting to see that Bitcoin just totally just destroyed everything else it is a very short period of time, but it just is interesting to see, because as I said, on these charts, long term, zooming way out, you know, Bitcoin has been in many bull markets against gold and outperformed gold and silver and all the rest of it. But I've gone through that in detail. So the other thing I wanted to mention too is if we go to the Russell here, this is really fun stuff for me anyway. If I go here, we had a double top here, and I want to show you guys how to do some of this yourselves as well. I have the 50% tool here, probably not from the bear market bottom. There we go. Let's do that. Boom, bear market bottom, right on the 50% level. If we have this off a log, I'm just curious. I haven't done this before or checked. Yeah, so we'll have to see how the Russell does. Or excuse me, the Dow Jones. Yeah, sorry, I don't know why I said the Russell. But anyway, yeah, we'll see how it reacts to this. A little bit weaker position because it is under that trend line. But the point that I wanted to make here, the point isn't necessarily to predict what the market was doing, but I had these projections up ahead of time so that at least I wouldn't be caught off guard. This is a double top here. It's a pattern that often shows up in the markets. And if I use the trend-based Fibonacci tool, let me just throw these lines up here. And basically what I'm doing is projecting this move right here off of this point right here. So this is the halfway point, and then this is, one, and then 1.5. This would be 150% of this move. 2 would be 200% or 2 times this move, and it just projects it down. And these are often levels that you see, and if it breaks through 1, you can often expect that it is going to make it to the next level here. And again, with the confluence here of the 50% tool and this 2.5 level, it just kind of ended up calling the price on that. Does not mean markets can't go any lower. I just wanted to use this as a way where if this was ahead of time before anything is on the right hand side of the chart, because nobody knows what's happening on the right hand side of the chart, you would have known, well, it's likely that we're going to see some support around this 50% level, and it also coincides with this double top projection. That's 2.5 times of this move right here. And that would have given you a little bit of heads up. And then I think this is going to be a really messy chart, but if I drop into the daily, because I was doing the same thing with Bitcoin, this is going to get really messy, but just bear with me here. Okay, let's see how I can clean this up. I'm just going to get rid of some of these here. Okay, so a couple things going on. This pattern right here, I saw ahead of time as a potential head and shoulders pattern. That's also very common in the markets as a topping signal, where you have a shoulder and then a head and then a shoulder, and then this neckline is along the same level. And so I think I drew that out probably like right in here. We were going up, but we had low exchange volume. I wasn't expecting the rallies to be crazy. And we were just kind of slowly getting support on this line here, on this support line. But I had noticed that pattern. And I was like, okay, well, let's just see what happens there. Just because you want to have a bullish and a bearish case. You can't the whole thing is to not be caught off guard because people are caught off guard right now. I'm not worried about it because I'm like, oh, well, these levels make sense to me. And in fact, if I go back to the, if I do just go back to this chart real quick, one thing I wanted to mention and didn't was when you have a trend like this trend goes back a long ways. And when you have a trend like this and you're overextended like this, where we are, I would say that this trend line is essentially the mean. And when we get up here, I'm not sure how many standard deviations, but we're probably at least two standard deviations from the mean. And so typically you're going to want to, like statistically, you would expect price to come back towards the mean because 80% of everything happens near the mean, and anything like 1 to 2 standard deviations either side, it spends less time there, is what I'm saying. So it's going to spend less time, um, a couple standard deviations away from the mean, and it's going to want to make its way back to the mean, which happens to be where the 50% level was and this trend line. I'm kind of treating the trend as kind of a proxy for the mean. That's my own interpretation. There are other charts you can put up here that will show you an actual moving average of the actual mean, but I just cut some of that noise out, and that's what it means to me, and that's how I interpret it. So, but the point is this can happen a couple different ways. You can have price, you can have this balance out in either time, price, or both. And so from here, we might have kind of come along and you know and then carried on or something. This may not be the right timing, but you can see how it could have slowly meandered towards the mean and then taken off from here, but instead we have a very sudden visit to the mean, and then we're off again. So similar to this, like right here, we could have had a savage sell-off and started to climb out of it a little sooner, but instead we had an entire 1 year bear market to get back down to this level. And so what took a year, now we just did in a couple days. If I were to project this out to here, yeah, March 2026. You see, that's about a year from now. I just kind of drew this as as a whatever line, but you see what I'm saying. Um, so time will tell. I mean, we still don't have um, any confirmation of this being the low, but I just wanted to kind of point that out that, I just don't want to be surprised. That's the whole point. So anyway, I believe I was at the BTC chart. Oh yeah, over here. Going over like the bullish and the bearish case scenarios as I was measuring them out. Sorry, I had to do a little detour because I meant to mention that it's how can the markets cool off? It can happen in time or price, and so far it seems like price is leading the way on getting back to the mean. So, but anyway, so what I had noticed this potential head and shoulders pattern, and what you can do with those is you have a trend line and you measure from the neckline to the top there, and then you can project it off of this neckline here, and you get a projection down into here. So this is why I have this box here as this resistance zone, because if I go back, this is a significant level. I think this is the previous top we had over here. And so we would expect to see support. So even though we have broken this trend line, we're broken to the downside, I would expect, to get a lot of support right here. And the other thing that I noticed as part of this head and shoulders pattern was also a double top. So if we go back to our fib retracement tool, which is the trend projection, we go like that. Sure enough, we're getting support on the 1.5 level there. And so because we didn't slice through it, we may find support here. I mean, we just have to find out, but we did find support here so far. That's a good sign. Also more confluence down at this level here. This all coincides with the head and shoulders pattern, the double top pattern, the previous tops from back over here. So that's what I look for. Like the more confluence, the more support in my mind, and that ends up playing out quite a bit. So what I do like seeing here is so far, it's going to all change by the time you're watching this video, honestly, but we do have a higher low. This managed to close above these lows, not above these closes. but we did end up closing above this low and this low. So that's on the very, very short term. It's a positive sign. But I just wanted to showcase how you can kind of go over these things ahead of time and give you simple ways to measure out and see like, okay, well, where could I see price go? And you can do the same thing for double bottoms and inverse head and shoulders and stuff like that. So that was just a fun one that I wanted to mention. And let's just carry on. Uh, yeah, did we do the Dow Jones? Yeah, we did because that was I did another double top projection there, and then it just kind of landed right on the nuts. So they're very useful. Does that mean price has to stop there? No, but most people are completely blind when it comes to this stuff. They're just driving blind. They have no idea, and they're all emotion. So I just wanted to kind of showcase some more data-driven approaches as far as technical analysis goes. So I'll do more videos on technical analysis. I'd like to have a whole series on that. Just really basic stuff that anybody can throw up on a chart. Doesn't mean that it has to happen. Um, a lot of people say technical analysis doesn't work because, if I get a rejection here off of this trend line, it has to go down. It doesn't have to do anything. It's just, it will show you signs of strength. And there are some pretty textbook things that the market ends up doing time and time again. There's really nothing in the markets that has happened that hasn't happened before. We all think it's different. It's not. Human psychology is the same as it's always been for hundreds of thousands of years, and people are emotional when they trade. So that human emotion ends up getting plotted on the chart, and there are certain patterns that coincide with that. As simply as I can put it. So it's not mysticism, it's not woo-woo, it's just human psychology is the same as it's always been, and it just gets plotted out on a price chart, and you can, measure it out. What else do I have here? Hmm. Yeah, so one thing I wanted to mention too. So if I zoom out again, um, we have had a lot of peak fear like right in here. And I just want to say, like, never in history have we had peak fear this close to a top. Like, if this were the cycle top, we have not yet ever had peak fear this close to the market top. So I just want to make that, I mean, if you're trying to stack probabilities in your favor and something has never happened, it's probably not wise to bet that way. Am I going to bet that the market's going to go down from here? Can it? Of course it can. Am I going to bet that way based on the probabilities? No, because so far, the way I see it is we've come up, we're coming back down to retest this zone here, and that's exactly what we did in the S&P 500. We were basically just retesting the 2021 top, before that bear market. We're just retesting that top. That's pretty normal behavior as well. They happen on such long periods of time that, in hindsight, when you look at it, it's like, oh yeah, of course, that seems obvious. But in the moment, at the time, if the market's going down for 3 or 4 months, it seems like all hell's breaking loose, right? So, um, things to keep in mind. So, um, yeah, I wanted to mention the peak fear. So, the other thing that we do have this week is there's a lot of major, I guess, data events happening this week. If I go to forexfactory.com, I'm not going to do this now, but you go to forexfactory.com and you can get a calendar of all the major economic data that's coming out. And a lot of people try to trade around that. Basically what I do is I consider it volatility because if the market reacts positively or negative to those figures, it's usually for a few days, maybe even a week, and then it's back to normal. Like they're not none of them really like capture a direction for the next, it's not a tradable event in my opinion. I used to try to do that. I used to like sit by the computer and like wait for the data to come out, and then like if I saw that it was sharply going down, I'd try to like capture some of that. And honestly, you probably could, but there's so many people trying to do that they're just gonna get you're just gonna get wrecked. So anyway, the what I'm really trying to say is we're getting a lot of volatility right now as the cycle continues. We get a lot of volatility. Just going back to the S&P 500 again and just zooming way out, you can see from the GFC how we've started to wiggle quite a bit more, and it's just very obvious that the volatility is increasing along the way up. So as it steepens, volatility increases. So that's something that you expect near the ends of bull markets is for the volatility to increase and emotions to get higher. We have a lot of economic data coming out this week, so I would expect more volatility, and we're just going to have to see where it lands. Everybody is expecting the market to crash on Monday, so I'm not expecting it. Everybody else is expecting it to. It can, of course. I'm not trying to call it one way or the other, but if everybody's calling for it to crash, I also think Bitcoin would have led the way, because usually if people are trying to hedge their positions or hedge against bad news or hedge against war or anything else, what you typically see is the only markets that's open on the weekends is the crypto market. And so Bitcoin can usually take a beating because people are trying to sell. They can't sell their stocks because the stock market's not open, so they're going to sell whatever they can. And in that case, that'd be the most liquid available thing, and that would be Bitcoin. So we did see Bitcoin savagely sell off. This was that double top actually on the daily. But we ended up closing higher than this bottom, which is nice. And we do have a higher low so far. And I would really like to see that. That's very reminiscent of this right here, this higher low right here. And if we can start to see ourselves kind of climb out of this over the next couple months, that's what I'm tracking. I just want to see support above this line here, which is basically this old top to here. I would love, it's just retesting it beautifully. It's more volatile because, like I said, later on in the cycle, things get a little bit more volatile. What else do I have here? So what am I doing right now is I'm basically going through a bunch of charts. And instead of trying to catch a falling knife, because prices in a lot of charts are looking really attractive, what I'm actually doing is, again, forgive the messy charts. I just kind of have everything on here, support and resistance zones and old trend lines that I probably, I don't really need this anymore, that kind of a thing. But oh yeah, let me get this back on log because it's just a little easier. Anywho, so what I'm looking for is an overbalance in time and price to the upside from a bottom to give me more confidence that I'm going to that we've actually seen a bottom. And so let me see. I think what we have. Oh, is this from back here? Yeah, I think what I did, just to be on the really conservative side, is this was since the very peak over here. This, as far as price goes, this was as high as the market was able to push it, and then I guess would I do that? I guess that would be the longest push. Excuse me. Yeah, that would be the longest push in that whole time. So what you basically would do is you would find the low and project it off of the low. And once we can get price above this level for longer, which actually pushes us out into May, then that would be the signal that I would be looking for. So, yeah, if it's interesting. Now I'm talking to myself here, but anyway, what I'm doing is on multiple charts, I'm plotting that out, and I'm just have set signals. So if I go to this trading over here, I have a lot of these levels marked up where I've found a point where price has been pushed the highest for longest, and I sometimes it's in the same move, but if let's say in one run they were able to push prices up for 5 days, and then in a different run maybe they only pushed it up for 3 days, but they pushed it up the price higher than any other time, I will just take both of the time and the price of those different moves if they are different and just make a line out of that. And so basically what I have right now is I'm going to move this right here to this low because we've created a new low. And in this particular individual chart, once price can get above this line right here, which is great because it coincides with this 50% level of this move and it's above the trend line, adding layers and layers of I guess positive price action, like these are positive signs and you're just stacking those in your favor. So I'm not even going to bother with this until we're out of this trend line, and I would much prefer us to be above these bottoms and into the strong half of this tool, and that will also coincide with an overbalance in time and price. So if we're seeing a stronger market and we have other clues that we're in a stronger market, once these triggers are hit, then I'll be interested in looking to buy. Until that happens, you're essentially catching a falling knife. And imagine on this run, if you tried to buy every time we came down to support, you wouldn't have any money left and you'd be down on your position, right? And so if you would just save all of your money, and once we get more confirmation, then you start a position from right here, maybe, you've missed, sure, you missed the bottom, but and in crypto, it's a lot. You missed out on 70%. That's a lot. And it is a lot especially when you go later in the cycle, sometimes buying this, let's say this was the bottom and you bought it, and versus you buying it right here at the end of the bull market, that might be the difference between like an additional 5x or something. But that's just because it's so damn volatile. You just don't want to get greedy when you're talking about getting several 100% returns. That's good enough. I promise you, I've been around long enough. And if you can scalp a couple 100%, you're beating any asset class in the world, and you should just take it. You should just be patient. You could have saved all that capital. In fact, there's a million different ways in DeFi to earn a yield on your cash while you wait. You could probably make 10, 15% while you wait forever. And then when you're ready to get in the market, you're just in a better position. And so that also coincides on this particular chart with this pivot point here, which I would consider pretty major. And so ultimately, I don't even want to get into this market until we've gotten back to this level. And so all I've done is I've done that time and price analysis. Once price gets right here and it's pushed out into April 10th or so, it doesn't have to. I mean, we might hit that price way over here. It doesn't need to happen, that quickly. It's just if prices go higher for longer than this, which was like 4 days or 5 days, then we've made it. And if we've gotten higher than this, then we've made it. So whether that happens soon or over here doesn't necessarily matter as much to me. But so that's what I've done, and I've just gone through all my charts of anything that I've found interesting, and like this one is now going to be projected off of this one because I can tell that this run up is less than what I have here. And so I have an alert here that I'm going to drag down. So now this is, continue. So now my alert is going to trigger when we get above here, which is great because now I also, again, I know I'm above my trend line here, and it also happens to coincide with this major pivot point. Being above this pivot point would be a sign of strength that you would probably want to wait for in the long term instead of trying to scalp the exact bottom. This might be the bottom, and it quite possibly could be. We just don't know that. So I wanted to give you some examples of what am I doing when I'm going through charts to find signs of strength, because that's exactly what happened to Bitcoin in the last run here. We had this move right here was the longest and farthest that Bitcoin had been pushed in this entire sideways consolidation, projected off of this low. We ended up getting it in price here, but not in time because we fell before we hit our time mark. You see that? Like we were a couple days shy. So not until we broke above the same price point later did we hit the time requirement. So right here on this top, we had our overbalance in time and price. We had a couple higher lows and a couple higher highs. These are all stacking the probabilities in our favor that we were nearing the end of this. And this was an 8-month consolidation. So trying to figure out where the bottom is, I mean, how do you do that? Well, you're going to have to sacrifice a little bit of time and a little bit of price in order to get a little bit more confirmation and insurance. So once we hit that, even though prices went down almost immediately, there was a high probability and high conviction that this would have been like a very good buy the dip opportunity. So if you saw low prices, scoop them up. It was very likely we weren't going to be visiting lower prices because we had just had that push higher in time and price. Very important, very powerful signal. So effectively, that's what I've done in the total cryptocurrency market, which is what I was trying to do earlier. And then I ended up just talking to myself, trying to figure out which trend line do I want to use for my overbalance and time and price, because I think up until that point, because this is really when the sell-off happened, I think I had basically chosen this one, and I'll measure it out and I'll project it here, and I can see, okay, there's higher price, so I don't need to readjust. What I might do here is that I noticed that, we didn't go as high in price, but we got longer in time. And so what I will do is I'll just drag that over until we've hit the time requirement. So now we have this line would be the overbalance in time and price. Set that up there. Once price gets beyond this in the total market, this would be one indication, very good indication that the entire crypto market, because it is separate than Bitcoin. Bitcoin rules everything. It's the king of the crypto market. So we want to see that signal in Bitcoin. But then the further confirmation would be seeing us achieve this overbalance in time and price. That would get us breaking through the downwards trend. And I have not measured this yet, but just out of curiosity, where's the 50% level in this? Nice, it's up here at these tops. So just for fun, what about from here to the low? Where does that coincide? Yeah, so we would be in the stronger half of this move right here where we got the rejection from this support. We'd be in strong territory there. Not in strong territory the whole move, but we're leapfrogging our way there. We're getting hopefully higher highs and higher lows at this point. Definitely higher highs once we reach this price, indicating that the trend has changed. Other than that, it's more of the same. Like you would expect. I don't expect anything except for the market to do what it's been doing until it tells me otherwise. So while I think that we're very near a bottom, probably more like something like this, we just don't know that. And maybe we just had a COVID level event just now. And so, is the selling over? I don't know. Everybody's expecting the markets to savagely sell off on Monday. I'm not sure that it's going to happen. A couple things to wrap this up. There's a lot. There's just so much happening right now. It's pretty exciting stuff. Everybody else is losing their minds. I've been waiting for, I like moments like this where there's extreme fear and you have savage sell-offs like this because it's a bull market so far, and those are like we just flash crash to the mean, scoop that shit up. That's why I've been saying it's been a good time to start accumulating right now because we were already down like 60-70% in a lot of altcoins, and that's what happens every time. They pump up a few 100% and they bleed 80%, and then they pump up 8 to several 100% and then they bleed 80%. It's just par for the course. It's what happens, but everybody is so like goldfish brain that they forget that's what they just forget. They don't have the attention span. So anyway, seeing some more incline here in the trading volume, which I really like to see. Very, very early days, but we're just gonna it's a moving target. We'll have to keep an eye on that. I would love to see it form a base. I mentioned this in the group and showed that. Nothing really to show as far as ETF inflows and outflows. The last major signals we had were still at this last previous low, which I think is our lowest low that we have so far in Bitcoin. So it has so far that massive level of outflows where retail gets it wrong at the extremes. That happened right here. So, and then so far we have a higher low. This could all change by the time you see this. It's always a moving target. Everybody just wants to hear, where's the market going? When is it going to go? We don't know. We can do price analysis and time analysis. And in fact, I have a lot more to learn on time analysis that would get me even more honed up. But what I would like to do is there's a few signals for me that are extremely powerful that I just haven't seen yet that you see at every market peak. And, we just eclipsed 50 on the ISM, which is the business cycle. Anything below 50 is considered contraction. Anything above is considered expansion. And historically, so far, we've had higher highs on the upside and lower lows on the downside of that. And I can go into the mechanics of why I think that is later. But either way, what I'm saying is we're very early in the business cycle. So, and we have not so far had any confirmation of a top in the real estate cycle. In the last update, I said we're nowhere near a top in the real estate market. I want to rephrase that. That could be the top of the real estate market. We don't know. Typically, what has happened is the stock markets don't correct for another 12 to 18 months after that. It is what starts it, but it's a leading indicator. So when I say we're nowhere near a top, I really, that could have been the top, but we're nowhere near seeing a top of the stock market because we have at least a 12 to 18 month lag on that before that would roll over in a bigger way. So everybody expecting further downside and all hell to break loose is not what happens at the top of a bull market. So usually that's what happens at the bottom of the bear market. But by the time we get down, prices get down so low that enough people have caught on, they're like, oh gosh, we're going down. Well, then by that time it turns around on them. So anyway, it happens time and time again. So the markets will fool most of us most of the time. So, and myself included. So that's why we study and we go and we play detective and we learn as many strategies as we possibly can to get us on the right side of this thing, so it doesn't buck us off. So expect volatility this week. Absolutely. Zoom out on the weekly charts, see where those close. We all have weekly closes above this major trend line and above major 50% levels of the entire bull market. So we're in strong territory. We've had a flash crash to the mean. We will see what happens from here. But if we um, before I leave this right here is our overbalance in time and price. So if you wanted to, what I will probably do is all I do is I click add an alert and I go OTP. So that's an overbalance in time and price for Bitcoin. And I always forget to do this, but make sure you push this as far ahead in your calendar as you can. Create. And now I can walk away because I don't really care what happens until then. Anything in here is noise. We're chopping around. We have no clear trends. Well, we're down on the weekly and the daily. So those are the clear trends. But I would say we're clearly in indecision because we have, let's see, where do we go here? Am I on? Oh, that's so interesting. Oh, that's really interesting. Maybe I drew a different trend line back there. Huh. Anyhow. Well, shit, no. Well, anyway, we're still indecision. Okay. Oh, that's what. Sorry. Gosh, I'm an airhead sometimes. There's a lot going on, a lot for me to try to keep track of. So we're going down here, but we're also. Oh, that's where it was. We're conflicting here because right now we've been seeing these higher highs, and so we've you know I don't usually get too fussed about like a day or even two below this because we have this support down here. This is why people will say technical analysis doesn't work because, oh, we've broken below this trend. It has to go down. It's like, well, it doesn't have to go down. In fact, the markets fool most people most of the time. So a lot of times when I see this break to the downside, I don't get super excited because a lot of times it's a liquidity grab and market makers know that people are expecting this. So they will sell a bunch to push price down below and get people to panic sell so that now that we can buy down here because I'd rather buy down here than buy right here. And so there is market manipulation that goes on. Just keep that in mind. Don't trade around that, but just be aware. Don't be a sucker. And the second this breaks trend, think that you're a genius and you're going to short it, to the bottom of the bear market. It just doesn't work like that. So anyhow, that's what I mean by indecision. We're getting these higher lows here, just right here in the short term, lower lows until we definitively break one way or the other. We will just have to see. But so far, we're holding support very nicely here. Bitcoin didn't even decide to give up an inch until the weekend, and we will just have to see the way traditional markets open to see where we go from here. It looks like, at least on the futures contract, just zoop, just getting bought up immediately by long-term investors who see good value here and know the game and can see that, oh, well, we're just retesting this top right here. And, oh, we're just retesting the mean, when I take this off a log, oh, we're just, so those kinds of things, like just trying to use the data and historical data to paint the picture rather than using our emotions to decide, what's going to happen. So anyway, I think that's going to wrap it up this week. Expect volatility, and we'll just see how this all plays out. But my plan so far, I've already said, is I've set up a bunch of marks on my different various charts to. I'm not interested really in getting heavily positioned until we get that overbalance in time and price, mostly because crypto is so volatile that it's really just worth waiting for those signals. You lose a little bit on the bottom, but you can stomach it a lot easier because it's, you don't know how far and long it really can go. We can keep going. I'm not saying we can't, but I like what I see. I like big flushes like this. This definitely kicked a lot of people out of the market. And in a bull market, that's what you need. You need to get rid of all the people who are holding, more temporarily, and people who, bought, you know, at this low and that low, are, not saying they haven't taken profits, because of course that happens too, but the longer term investors kind of control this, and then other traders and other people emotions get involved, and we kind of go wonky all over the place. So anyhow, hopefully that was helpful. Like, subscribe, leave some comments down below. Like, what do you like? What am I mumbling on about too much? You want to hear more about? What do you want to hear less about? Give me some feedback. I'd love to hear what you guys have to say. And if you guys are finding value in it, and if you are finding value in it, please let me know. Give me a like, and hop into the Telegram group. I'll have that linked as well. And just introduce yourself, or ask me anything. I love talking about this stuff and looking at charts all day. I have a good time doing it. So hopefully I can be of help, and would love to answer any questions. So until next time, guys, just take care and be safe out there.